It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades today is Don Kaufman, the co-founder of Theo Trade. Great to have you both with us as always. Now, Don, let's just start with big picture on the markets today. You know, mostly around the unchanged line as we enter this government shutdown.
Yeah, right now it's the government shutdown. Look, see, nobody cares. It's just move on, business as usual. Take a look at AI and the circle of life, as I'm starting to call it, as you know, you just basically do deals amongst like Oracle to maybe OpenAI, maybe throw a little NVIDIA in there, CoreWeave. And the circle of life goes on. I mean, there's not much interference, at least at this point in time, from a government shutdown. Might be a little different a few weeks out, but from here on out, it's still blue skies.
All right, so we've got a bit of a retail focus with your big 3 picks today. Your first one is Lowe's, the home improvement store, not the insurance company. You know, I was taking a look at their chart, you know, really on a pretty significant downward trend over the last month, down, you know, more than 4%. You know, what's your pick here?
You know, as a trader, I get to actually sit back and just be a little bit objective and jump on trend, and that's exactly what I'm going to do in terms of Lowe's. The trend right now is, look, it's trend down from 275. It's had a really hard reversal from 275. There's some economic concerns that lie ahead. If there is going to be any effect from the government shutdown, these are the kind of underlyings where, I mean, I'm not exactly sure how apt people are going to be to shop at Lowe's when we've had a shutdown, for instance, for 30 days or even 60 days, something wild like that. But in the near term, I'm just jumping on trend. I'm going to go out and do a trade for the November 7th expiration. So I'm relatively short duration in here. I'm going to buy the 245 puts, and I'm going to sell the 235 puts. So it's a nice $10 wide spread done for a $2.50 debit. This is an out of the money put spread. Nice defined risk trade at 250, looking for a fairly significant, continuation, if you will, of this downtrend.
All right. And like you said, a home improvement projects generally one of the first things to be pulled off the table when people start to slow their spending here. So with all of that said, Rick, walk us through the charts here on Lowe's, and you can clearly see that downward trending line.
Yeah, things were looking maybe a bit more positive, maybe about before we had our last earnings a couple weeks before that, because we broke above our downward sloping trend line that was the prevailing trajectory for much of the year here. However, we had our big breakout. We topped out around 275, as Don said here. I highlighted 266 as well. Low point, high point, and then subsequent high points as well. That was the support point after the breakout. Then it was the breakdown point. Those are the kind of things you look for in terms of horizontal price levels. 256 also stands out. You can see it was a notable low point after a gap up, a high point there, and then a consolidative point for a moment before it became support. Once again, fallen below that level now. Staying above 245, though. That's our green line here. Similar deal. Low points, high points, low points here. That would be a near-term supportive level to be on the lookout for. If we were to think about some of our other studies here, RSI, our measure of momentum, showed a little bit of bearish divergence. Price made higher closes. RSI was not doing the same thing, so we were seeing a mismatch between price and momentum here. It got especially bad right around this area here, and then that did translate into our downswing here. Now, after being in the overbought area a relatively short time ago, like the beginning of last month, we are on pace to cross into that oversold area, that threshold of 30 here. So look for that to happen if price breaks through the support near 245. We are breaking through our orange 63-day exponential moving average today. So volume profile shows that we are near this volume node near about 245. If we were to slip lower, volume really drops off again near about 230. To the upside, 260 or so, 255, heavier volume node as well. So perhaps an upside ceiling to watch out for if we do start to rally once again and reclaim some of this lost ground.
And shares trading right now right around the 247 mark for Lowe's. And I want to move on to your next one here, Target. They've been under even more pressure than Lowe's has seen so far this year. I think down about 35% so far year to date. What's your thought process here with Target?
One of the things, Rick's going to show you a chart in a moment. It's ugly. There's just no question about it. It's ugly. Here's one, though, where I'm actually going to take a bit of a contrarian stance. It's ugly, but there could be a bottom out there. And that's exactly what we're looking for, finding a bottom inside of target. So as you're going to see, and again in a moment, the stock is absolutely tanking. Rick is going to paint a fairly hideous picture. There's one aspect that I've actually picked up on here quite considerably as of late, and it's kind of, seeing a little bit of the unseen in the marketplace, and that is in the options marketplace, the implied volatility has been taking off to the upside. In fact, inside of Target, if you look at implied volatility, it almost looks like earnings are coming out. The IV is so high, and what this often is, is traders coming in and buying put protection. At that point, there could be a formation, again, of a short-term bottom. I'm actually going to take the other side of it and play for a bounce in here. Now, this is not like a crazy distant trade, just going out to the November 21st expiration. I'm going to be buying a 95 call and selling a 100 call. So it's a $5 wide call spread. I'm not looking for, this is the end all be all, this is it, the thing is finally going to rally. I'm looking for a bounce in the near term predicated on implied volatility. This $5 wide call spread costs $1.30. So you're risking $1.30, okay? Some nice upside opportunity over there of, $3.70 on this spread.
Don, I love when you come in with a bullish thought on something with a chart that looks like this. So, Rick, walk us through maybe where that potential bottom could be.
Well, to Don's point, if you were looking for a short-term potential bottom, this might be the place to think about it. And really, sometimes the pendulum just swings too far one way, and there is a contrarian play to be made here. Overall, though, declining trend line here, lower highs, but we did see some solidification here near about the 87 level, our green line there. That's about where we hit our low points. I also noticed that we had a falling wedge type of shape here between our two blue lines here, typically regarded as more of a bullish pattern. And it's also interesting to me that it's happening at this rather prominent supportive area here. Still, though, today's price activity not super encouraging. We are near that low point once again. So RSI trending upward here. We did see a little bit of improvement here, but overall, same deal as price. The trend is still down. We have not quite made it up to not only the 50 midline, but also the red trend line here as well. So we can see that our moving averages give us some boundaries that match up pretty well with our trend line here. Our orange 63-day EMA is in confluence with that trend line just above the 95 level. So a break beyond that point would set the stage for a return to perhaps the 101 level. That, to be more specific here, that was about where we hit these highs and lows in terms of closes. And that gives us a bit of a range too from this period here, with the other boundary being 108. So 101 to 108 stood out to me looking at this chart here. And when we do look at our volume profile study, it happens to match up pretty well with some of our heavier volume areas here. You can see the node is right between that area we mentioned here. Our point of control is right near 97. So that would be a potential area to watch for consolidation as well. A quick look too, a 10-year chart. Not looking too good. We're crossing below this long-term supportive area. The heavy volumes down here near 72. It could be a dicey situation to be sure, but still there are opportunities one way or the other depending on your outlook.
The chart may not be pretty, but I still walk into a Target for one item and leave with 30 items. So they've got me at least. On this next chart, though, is a very different story here. Alibaba, your final trade, up more than 100% year to date. Are we bullish or bearish on this one, Don?
Oh, we're bearish. It wouldn't be me if I didn't take at least one negative shot at AI every time I came on here, Marley. And that's actually going to be in Baba. Look, this thing is absolutely parabolic to the upside. I'm not even going to look so much, though, at the price action in the chart. What I'm actually looking at is kind of underneath the hood. I'm looking at the options marketplace. Two things that are a critical standout inside of Alibaba. Number one, weekly, what we term expected moves. That's effectively like, look, if the market says, the option market says we're supposed to move $10, and all of a sudden Alibaba moves, for instance, 15, that weekly expected move has been exceeded in 4 consecutive weeks. That basically implies that the option marketplace has been completely and totally wrong. Okay. In addition to that, the option implied volatility skew. Now we're geeking out on you for a second, but the IV skew has actually flipped over, which displays, if you will, risk to the upside. These two factors kind of combined, I think, is a decent setup, okay, for a pullback. Again, I'm not looking for a long-term pullback, just a pullback. In this particular case, I am, though, giving myself the gift of duration. I'm going out to the December 19th expiration because even a mild pullback is something significant when it comes to an AI kind of bred stock. Here, December 19th, I'm buying the 165 puts, selling the 155 puts. So it's a $10 wide put spread for a $3.50 debit. This is a big trade. I'm, literally standing in the way of the freight train and trying to get it to stop, but I'm doing it with defined risk and looking for that pullback between now and December's expiration.
And giving yourself a potential holiday present to boot there, Don. Now, Rick, what do the technicals tell us for BABA?
Yeah, if there were a place to look for in the near term, 165 makes sense. The reason I say that is because it's about where we had our highs before our gap up. So around that general level, so that trade would be looking for the gap to fill and then collapse once again here. But a very sharp upward sloping channel here. And often the less sustainable something is relates to how sharp of the move is. So the steeper it is, the harder it is to keep things going. So once again, it's kind of all about the timing here. So now we're seeing a Harami type candle. Our small green candle is completely contained within the previous day's larger red candle. So that's a sign of slowing momentum, of potential indecision here. But we also had some good examples of the consolidative behavior, the bull flag, bull pennant type of price action you see here and here, where after the gap up, we see that brief give back period and then a push beyond those old highs. It remains to be seen if we're going to get beyond that level near 180 with this one here. But for now, things are above that point here. Moving averages, not really much help, pretty far away at this point. We are seeing a small amount of bearish divergence here, but it's more complicated because we're in the overbought area. So a mixed signal there. Look for the breakout one way or the other to help provide some further clues. Volume nodes here, right about at current price, +2 standard deviation channel just above 183 could be one stopping point based on that particular study, showing it's an extreme price relative to its own history. If we were to retreat once more, that 165 level stands out. Again, that's the next closest volume node area.
And Alibaba trading right about 180 right now in the month of September was up 33%. Want to thank you both, Don Kaufman and Rick Ducat, for being here with us for the Big Three today.